Hi there. In this video, we are going to cover the high-speed L1s, including Solana, SUI, and NEAR. If you like speed, you can comment speed. As usual, I'll cover Wyckoff stage of these three cryptos, as well as their potential price change and key price levels. These are education content only, not financial advice. Also, to avoid helping you to avoid FOMO and panic, the Asset dashboard is now available for free on Substack. The handle is AssetLex. Go check it out. Now, weekly chart of Solana. The volume has been pretty low for 3 consecutive weeks. Okay, I am making it max already, but you see the volume is like non-existent. I'm not sure whether it's just Binance. Okay, we can take a quick look. Let's say Coinbase. That's not the case. Okay, there's some issue definitely with Binance. All right. Always, if you find something too odd, then go check the other exchange. So this one doesn't affect our Wyckoff analysis. So it's still like dropping and then kind of trending upwards likely. Okay, just to check. That's similar case. Okay, so it's not going to affect us, but the volume perspective does matter because it's still staying at around average, I would say. Okay, across the past 6 months since August last year. Okay, so back to the original chart where we have the text. This may well still be a point where it hasn't actually get into the accumulation cycle. Okay, it's still way higher than the 2002 to 2004 level. Not saying that Solana cannot accumulate at this level, but looking at the volume that hasn't died down, okay, it looks like that volatility is still in sight. We look at what the Coinbase show us, right? These are not low volumes. What's low? At least somewhere around here, if not, this one. Okay, so that's one of the very key things that we have to look at when it gets to this point, whether the panic over stage has arrived. I would consider these like kind of still active speculating activities going on because a lot of geopolitical events are happening. It triggers different guesses or speculations from people about what's going to come to the economy. Very previously, before the war, there's less of these kind of speculation. But once the war started and dragging on, it's going to create more uncertainty, and basically there will be different teams. Some people think recession is going to come. Some people will think interest rate is going to higher. Some think it's going to get lower. That's why a lot of these kind of fluctuations in terms of the price, but it's not showing us very long candlestick bodies because the bulls and bears are basically more or less equal strength. Like I said, the different wheels have kicked in, and that's why there's no one-sided view as of this moment, whether to push the price further down or let it shoot up just to do another test, okay, like what it did in September last year, but it did not pass the previous first high. All right, so the big picture point of view is still transiting from distribution to accumulation. It looks to me that way. Okay. Here, if we look at the daily chart, this volume definitely has something that's wrong, but the trend is still observable. Okay, the candlesticks aren't wrong. Here, the price has briefly gone outside of the downtrend, but once I look at this, it's not tight enough. So if I adjust this, the slope changes. And if I want to put these back into the channel, we are seeing actually it's not a very solid confirmation that the price has gone outside of the downtrend. Okay, but I have to make it tighter because these are just way outside of the channel now. So let me move it a little. At least this point is touching in addition to some of these. All right, so here the price has broken below this ascending trend line. It tested once on the 22nd, okay, right after our session last week. And 2 days ago, it's a clear sign that this uptrend is over. Okay, we talked about this around 22nd, 23rd of March, around this cross. We will get an answer. Okay, and actually, it kind of broke out, fake out, you can say, and then come back to this wedge, and eventually really broke outside for 2 days just to come back, traveling along the ceiling of the downtrend. Okay, it's still a tricky situation for Solana in this case. All right, if, let's say, it finds support along this ceiling and trade at least sideways between the 75 purple key level to the red key level of 89. That's going back to what happened back in February for the entire month almost. Okay, it's only until March that the price was able to briefly break above the red key level of $89. Okay, for 2 times. Third time over here. So it seems like it's slightly improving until 2 days ago, it comes back to this range. So base case is range bound between purple and red. And if we double check with the volume, the reds and the whites, especially this one over here, is like a reversal signal. Okay, it's a very short candlestick with the wick from the top, plus not so low volume. So there were quite some people selling. Doesn't let the price go up, and then subsequently 2 days of increased volume, pushing the price further down. Okay, so range bound base case, if Solana really comes down, we talk about this 2022 to 2023 accumulation range is way lower than the purple key level of 75. So it's still a possibility for Solana. If any of the economic environment is not supporting risk on sentiment, not supporting liquidity to come back, that's where it's possibly going. But it's too early to tell. Here, 7th of April, in case it does come down to this triangle, okay, come back to within the channel like what it is doing right now, it still hasn't been able to break outside of the ceiling as of this moment. If it travels towards this triangle, in slightly more than a week's time, there is a window. Either the price breaks the 75 purple key level, or it solidly stays outside of the downtrend and continues sideways, like I said, between the red and purple. Okay, of course, it's even better if it stays above the red, but what it has been doing, looking at this mini downtrend over here, it may take a while. Maybe some of these news coming out from the US is going to help give it a push. If that's the case, let's assume that it stays above where it is now. Okay, it is heading towards one of the dates over here, the 17th. That, once again, another window or opportunity for the bulls and bears to tell us which side the price is heading. Next is SUI. Weekly chart of SUI, still early accumulation stage, going through the paper hands diamond has checked out range bound between the blue key level of 88 cents all the way to the red key level of $1.08. Okay, so it has been within this range for the past 7 to 8 weeks, and it's still going on. Okay, it gets heavily rejected from the purple key level of 99 cents, but still finding support at the 88 cents. The volume has been declining for 5 consecutive weeks. So there's nobody actively selling, pushing the price even further below the 88 cents. But look at what happened back in 2024 summer. Okay, for a brief 2 weeks, 2 times. Okay, that means 4 weeks in total. The price did go to challenge the green and the yellow key levels of 64 cents and 56 cents. At one point, it actually challenged the 45 cents, but that climbed back quickly. So the weekly candle did not close below the yellow 56 cents. Looking at what we are going through now, we need to see the price to come back to challenge at least the light blue key level of $1.82. Okay, and that's where the automatic rally was in the beginning of this year, in January. Okay, higher than average volume, price climb to challenge that light blue key level is what we need to see as a confirmation that money is starting to come back. Not saying the price can't go back to test the lower levels, because after that happen, usually, according to Wyckoff method, you can see the whales are going to do another round of shakeout. Sometimes they can do multiple rounds if the macro environment doesn't help. That's what they are going to do, extending the accumulation cycle. But sometimes if good news are pouring in, they will let the price surge so that those news is going to fuel the FOMO to as high as the whales want to. Daily chart. Okay, no surprise, still sideways. Okay, we talked about this last week. The price surged to the red and then gets rejected, coming back down to the blue. Now it's bouncing between the blue and the purple. It did the same since early February. Okay, bouncing like this. So that's the base case. The economic data coming out may change this. Okay, if it's bad for liquidity, the blue is where the bulls have to defend. Okay, otherwise it's going to start a new downtrend. Not that it hasn't started, but draw a little channel box over here, this parallel channel. Okay, it is actually edging towards this triangle, and that points to the 2nd of April. So by the time we get to that date, closer and closer approaching. 2 options: break outside of downtrend, break below the 88 cents. Within this coming week, we'll get an answer. Okay, whether it's still sideways or no, it's going to test a lower level. Not that it hasn't happened before. It went down in late Feb below the 88 cents, just that it did not go all the way to the 75 cents like what it did on the 6th of February. All right. Next is NEAR. So NEAR, few weeks back, it found support at the orange key level of $1.01. The whales let the price went up, okay, to challenge this resistance. We talk about this resistance at 1.39, you can say 140. That's where the October 10th tariff announcement day showed us last year. Okay, obviously there were occasions back in 2022 accumulation that NEAR has come down before, but October 10th indicated that it can still happen. So the price or the bears tested this during or close to December, mid-December, Christmas time last year, and then broke through it in January this year. Now it becomes a resistance. Okay, for the past 3 weeks, the bulls weren't able to break through that. You see the initial, it looks like the volume went up. But if you combine to look at the candlestick, this highest volume bar was actually having quite a bit of selling from above this resistance. So the next week, when the bulls re-challenge that line again, with a much lower volume, almost like half, okay? Obviously, they're not succeeding, and the bears took over. We've got 2 consecutive weeks of price coming down. However, the volume continues to decline. That means the bears aren't hitting very hard as well. Okay, so if that's the case, if that continues with a low volume, the price, even it may come back to retest the orange key level, it may not be too bad, okay? Remember I said the orange key level was almost the lowest point back in 2023 accumulation. Of course, back in 2000, it was even worse. But let's see whether the second time it comes down, if it really comes down, are the bulls able to defend like what they did back in February? Okay, most of the February was along the orange line. It's now coming back to retest it. And the uptrend that we talked about previously, it's time to adjust. Okay, not that it is over. Technically, it hasn't been over yet until the point it comes down to hit the orange, but it's getting close. So previously, we assumed a more steep uptrend. Now, after adjusting, it's more mild, but the price is still staying around the bottom of that uptrend. Okay, just adjust this a little. Now, let's extend this line as well, this intermediate resistance at around $1.40. We have some dates over here. I'm trying to move the yellow line, just want to extend this. Because this date is pointing towards 5th of May, okay? And the other one, interestingly, also the 5th, but June. Okay, those 2 are windows or opportunities for the bulls and bears to tell us, okay, once it gets to these triangle tips, there are only 2 options for the price, right? Break the resistance, or break the support. That's going to tell us whether it's going to change the trend. Okay, so if you're interested to access these sessions 2 days earlier, like the other members, join the channel membership now. Remember, the dashboard that helps you avoid FOMO and panic is available on Substack for free at the moment. See you over there as well. Thank you.